All year, the utilities have been putting up some tremendous performance. Even though this is the ultimate slow and steady cohort, their stocks have caught fire because they paid big fat dividends at a time when bond yields have plummeted. If you're looking for income, it doesn't get much better than utilities right now, and I got to tell you, given the 10-year, you're looking for income. But we've arrived at a weird place. On the one hand, this is exactly the kind of group to own if you're worried about an economic slowdown. On the other hand, when the Fed starts cutting rates, it's going to breathe new life into the economy, and that may cause a rotation away from the slow and steady utilities and into the cyclicals that we talked about at the top of the show. Which brings me to American Electric Power, the Midwestern utility that owns the largest power distribution network in America, along with a bunch of power generation assets. This morning, AP reported a mixed quarter, with weaker-than-expected revenue coupled with a nice 3-cent earnings beat off of a 97-cent basis. While the stock pulled back about 0.5% today, it's still an incredible year. Get this. This is a utility, plain vanilla, up 19% for 2019. And it remains my favorite one because of its diversified book of business. So can AP maintain its mojo? Let's dig deeper with Nick Akins. He's the chairman and CEO of American Electric Power. Learn more about the quarter and where his company is headed. Mr. Akins, welcome back to Mad Money.
Great to be with you, Jim.
All right, Nick, I got to tell you, this was the quarter that I think really did personify America right now. It seems like the consumer is really doing well, but when I look and drill down to your industrial sales growth, it does look like the things are happening underneath that are quite weak.
Well, I think there's no doubt that the tariff wars that are going on are starting to have an impact from an industrial standpoint. And when you look at our service territory, it does have an impact. But there again, that's not the only catalyst for growth for AEP, so we have to consider that as well.
Well, I mean, if we put oil and gas back in, we get a different picture. I know that Caterpillar was very worried yesterday on their call about whether oil and gas spend is going to continue to go up. You talk about pipeline spend. You talk about a pretty much an aggressive part of the economy. Is it strong enough to offset what's going on with the tariff-related businesses?
Oh, I think it is. There's no question. You know, we did report for this quarter lower load as a result for the quarter, but we also said the second half of the year we expect further expansion in the industry, particularly with new facilities and expansions that make up for a majority of that loss during the rest of the year. So, and we know of those expansions coming online. So that work continues. Oil prices remain reasonable, and certainly natural gas infrastructure continues to get built. So those are true positives for our service territory.
I think that our viewers who are not familiar with how much electric use there is from a big factory or a big, say, plastics plant need to hear from you. When American industry builds a gigantic natural gas liquids, well, they call them trains, but a gigantic export facility, that uses a lot more energy than, say, 10,000 homes, right?
No, absolutely. There's no question it does. And actually, you see what's going on in the Gulf area, particularly as it relates to Texas on the Gulf Coast where we serve. We had yesterday a large metals manufacturer announce an expansion in a new facility just near Corpus Christi. So you're seeing those kinds of things being done near the coastal areas, but also you're seeing growth in Texas and Oklahoma from a substantial standpoint with these new facilities. So they are consuming energy, and we'll be there to serve them.
I wanted to ask you about that. My power went out 3 times in the last 2 weeks. How much, just because it was hot, because it was rainy? Mine was not atypical. I only mention it because I follow it on NewJersey.com. There's a great map that shows all the outages. How often in American Electric Power? I mean, I don't think they spend enough, frankly. I think there's got to be something like that. You are talking in your quarter, every single quarter, how much money you spend just to maintain your network. How much turn light on, it goes on, do we have in AEP?
Absolutely. You know, the industry and certainly AEP is no exception. We're in the massive effort to rehabilitate and refurbish the grid, particularly to take care of times like just last week with high load during high temperature periods and cold temperature periods. We have to make sure the system is prepared for that. And certainly as we look at contingencies on the system where we can have outages, we have to be able to respond and respond quickly. So that is an effort, and actually that's one of the catalysts, the major catalysts for growth in the utility industry. If you want resiliency, reliability, and certainly from a cyber and physical standpoint, those kinds of investments have to be made. made. And that's what is going on around the country at this point in time. But AEP obviously benefits from that because we have the largest system in the U.S.
Now, one of the things that you also said, and I thought this was the best line I've seen. I didn't put any music quotes in this one that I could see. Maybe you snuck some in. But you said, we are also moving forward with the clean energy investments that our customers have told us they expect from their energy provider. They expect. How do you hear it? How do you know it? And what does it mean for your budget?
We certainly do deliberative polling of our customers. We obviously hear from investors as well, not only the ESG community, but certainly in terms of investors looking for de-risking the company going forward. So as you look toward the future, moving to a clean energy economy is a smart move for any regulated utility, particularly as it relates to cleaning up the environment and of course, the emissions. So that's an opportunity for us to continue to invest, and that's why you're seeing the investments being made, particularly in renewables, where we filed additional notices for the building of new capacity in several areas, and we also have acquired wind-powered resources and solar resources from around the country.
Well, let's deal with it. You say last week for regulatory approval, you filed to acquire and own 1,485 megawatts of new wind energy, which you said will provide significant savings, Arkansas, Louisiana, Oklahoma, Texas. Was there a time, Nick, when that would actually be a huge burden and be very expensive, and as the prices come down because of the American technology?
Yeah, there's no question prices are coming down, and also because there is a moderation, and that's why I talk about optimization a lot in our business. We don't need as much capacity, but if you can put capital investment to work to reduce energy prices for consumers, they wind up being a positive across the board. So it winds up being a win-win for not only our customers, but our shareholders as well. And renewables obviously provides that benefit.
Well, look, as always, you've been giving your shareholders a fantastic return. That's why we've been sticking with you for years and years now, Nick. I want to thank you so much for coming on Mad Money. Great to see you, sir.
Absolutely. Great to see you, Jim.
Okay, that's Nick Akins, Chairman, President, and CEO of American Electric Power. I know, look, I try to make it exciting because I want you to be interested, because I want you to own the darn stock. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.